Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 22nd of June 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. We have many new people who are finding their way to the Hurst Trading Room videos, which is wonderful. Welcome to the very fascinating world of Hurst cycles. If you find that you are not understanding everything that I'm speaking about in these videos, then we have many resources to help you learn about Hurst cycles. Apart from the Hurst Trading Room videos, we also have a document that many people have found useful called the 10 Core Concepts of Hurst Cycles, which you can download from that link on your screen at the moment. We also have many other introductory videos which explain all the details about Hurst cycles. If you go to our website, StInTrade.com, and go to any of these top-level pages such as trading software, you will find boxes where if you enter your email address, we will send you information about various different series of videos to help you understand what Hurst cycles are all about. Let's take a look at the markets, and here is the S&P 500. Now, over the past many weeks, I have been speaking about the two possible times that the 40-week cycle trough that we have been expecting for some time could form. The first time that the 40-week cycle trough could have formed was at the beginning of June, and the other possible time is of course in the middle of July. So here you can see one of the analyses on the S&P 500 chart. This analysis has the 40-week cycle trough expected towards the middle of July. And under this analysis, the trough that formed at the beginning of June, or over the last 2 weeks, was expected to be a trough of 40-day magnitude. So here you can see, of course, a trough did form on the 9th of June, Tuesday the 9th of June, and that trough has been phased by StInTrade software as a trough of the 40-day cycle. So that is one of the analyses that we have been tracking. Let's take a look at the other analysis, which expected the 40-week cycle trough to form at the beginning of June. And here you can see StInTrade has positioned that trough there as a 40-week cycle trough. It has drawn those diamonds in there. Now, those hollow diamonds indicate that it is very likely that the trough of the magnitude indicated, in this case the 40-week cycle trough, did form on that day. When a diamond is filled in, when it is solid, such as the 18-month cycle trough over here in the middle of October, that of course indicates that the trough is considered to be confirmed by StInTrade. So we had a trough form on the 9th of June, as I discussed last week. And price came up again and then came down, and last week in the S&P 500 it didn't in fact form a lower trough, but in many other markets, as we will see in a moment because we'll take a look at several other markets, a slightly lower trough formed. And so StInTrade has positioned the 40-week cycle trough marker, these diamonds, for the trough on the 9th of June. Some analysts might prefer to position that trough at the position of last week's low. In fact, I'm one of them. I would prefer to see that trough a little bit later. So in fact, I can do that very easily in StInTrade. I simply pin that 40-week cycle trough to last week's low price, and you'll see that as StInTrade updates the analysis, it will oblige and position that trough a little bit later, and it, instead of positioning the hollow diamonds there, will show me the nest of lows again. Now, a nest of lows indicates that this is when the trough is expected. And you can see it's a slightly staggered nest of lows, but when we have a good trough such as this happening directly over a nest of lows, then that is as good as seeing some hollow diamonds under there, because it's telling us that that is when the trough was expected. Now, I spent a lot of time last week discussing the subtleties of trying to get into this trade, and so let's just zoom in and remind ourselves about some of that. Here's the 20-day FLD that, of course, we use using the FLD trading strategy. And last week I spoke about how this trough that had formed on the 9th of June might very possibly be the trough of either the 40-week cycle or the 40-day cycle. It makes very little difference, and if that surprises you, then take a look at our information about trading using the FLD trading strategy, because when you're entering a trade following a 40-day cycle trough, then you will be entering into an E category long trade, and when you're entering into a trade following the formation of a 40-week cycle trough, then you will be entering into an A category long trade. Different category trades, but the same trade, effectively. Now, of course, last week I spoke about this little FLD spike over here, which made entry into this trade difficult. I wouldn't say difficult, but it meant that the conditions weren't perfect for entering into the trade. And of course, price coming up to the FLD like this and then tracking along the FLD looks very much like a GH category interaction, which is why I must say I favor positioning the trough, whichever trough it was, over here in last week's price action as opposed to on the 9th of June, because that looks very much like a GH category interaction. As I indicated last week, we could have used the 10-day FLD as a means of getting into the trade, and in fact it did provide us with a very good entry into the trade. There's the 10-day FLD coming down, and so there would have been our entry price using the 10-day FLD, and here would have been our initial stop loss. As a matter of interest, price crossing that 10-day FLD provided us with a projection up to 2116, I think it was, over here, and you can see price fulfilled that projection, and then of course met some resistance. And so price has bounced out of a trough, and I still, to be honest, cannot tell you whether that was a trough of the 40-week cycle or whether it was a trough of the 40-day cycle, and that we still see the 40-week cycle lying ahead of us. So how do we deal with that analysis uncertainty? Well, we are currently in a long trade situation. Whether you were able to get into that long trade, it was a difficult trade to get into. Maybe you weren't able to take advantage of that opportunity, but we're in a long trade situation, and so of course our next trade would be a short trade when price comes back down to the 20-day FLD. So let's quickly speak about that for a moment and consider the two options. The first option is that price is bouncing now out of a 40-week cycle trough which formed either last week or the week before last. And that is the option that we see on this chart. And let me just show the 20-day FLD. So what do we expect? Well, the interaction that we are trading now would of course be the A category interaction if price was bouncing out of the 40-week cycle trough. What comes next? Well, a B category interaction where price comes back down after it's completed its bounce up, of course, which it might not have done yet. It might still be moving further up before it comes down, but when it comes down, it'll come down to the 20-day FLD, and we don't know where that FLD is, but it will come down to that FLD and track along it before bouncing up again. That is a B category interaction. Now, we don't trade a short B category interaction, so I'm certainly not going to jump into a short trade when price next comes down to the 20-day FLD. We need to be a little careful. We need to watch this market, and we need to see how price behaves. If the bull looks as if though it is really running out of steam, and as if the price is really not going to continue moving up, then we might get a little more clarity, and we might say to ourselves, okay, perhaps the other analysis is in fact the correct one. If, however, the market steams upward and it looks really good and clear and obvious that this was a 40-week cycle trough, then of course I won't enter into a short trade when price next interacts with the 20-day FLD. Let's take a look at the other analysis and consider what we would do if this analysis turns out to be true. This analysis, of course, tells us that the trough that formed in the last 2 weeks was a trough of only 40-day magnitude, and that the 40-week cycle trough still lies ahead of us. Here's the nest of lows, and it is expected, as you can see, in about the middle of July. Now, if the market doesn't show much continued bullishness this week, then this analysis might turn out to be the more likely one. Because if price is bouncing out of a 40-week cycle trough, then we would expect a good bit of a bounce. And I wouldn't be surprised to see some new highs in these markets. If the new highs aren't achieved and the market is looking a little bit sluggish and starts turning down, then this will be the analysis that is most likely to be correct. And we will have a short trading opportunity because, of course, we are currently in an E category long trading opportunity, and our next trading opportunity will be an F category short trading opportunity. So I'm going to be watching the markets very carefully to see whether I can find further supporting evidence of the fact that a 40-week cycle trough has formed in these markets. Because if a 40-week cycle trough has formed, I won't be going short just yet. If a 40-week cycle trough still lies ahead of us, then I would indeed definitely be interested in going short to catch the strong move down that is likely to take place over the next several weeks as price moves down into that 40-week cycle trough. Let's take a look at some of the other markets to see if we can get a clearer picture of whether the 40-week cycle trough has formed or not. Here is the Dow, and this is the analysis, the Dow Jones Industrial Average. This is the analysis that I've been looking at over the past many weeks, which indicates that this trough is probably a trough of only 40-day magnitude. There's the nest of lows for the 40-day cycle trough. As you can see, price came down. Well, I don't know if you can see it, but take my word for it, price came down ever so slightly lower. I think it was only about 5 points lower on Tuesday of last week, indicating that probably the trough in fact only formed on Tuesday of last week rather than the week before, which is why I favor last week's trough as the trough in the S&P 500 as well, even though the S&P 500 didn't reach lower prices last week. So this analysis indicates that the 40-day cycle trough probably formed last week and the 40-week cycle trough still lies ahead of us. But there's nothing completely telling in this analysis yet that says that's absolutely what happened. Both options are still very possible and very viable. This turns out to be the better analysis, in my opinion, in the Dow Jones, but you could just as well argue that the 40-week cycle trough also formed in the Dow. Let's take a quick look at the Nasdaq, and here it is. Now, the Nasdaq has been moving in such a way that it seems likely that the 40-week cycle trough probably formed over here, similar to the S&P 500. The actual lowest price in the Nasdaq was in the second week of June as opposed to last week. So there it is, and you can see this analysis. I haven't done any trough pinning. I haven't influenced this analysis in any way. StInTrade believes that the 40-week cycle trough probably did form on the 9th of June, and you can see prices already steaming upwards and approaching the point of new highs, which we would expect, as I've mentioned, following a bounce out of the 40-week cycle trough. Let's take a look also at the DAX. The DAX is a very useful chart to look at because it provides us with a different analysis, but of course stock markets around the world tend to move with a great deal in common. That's Hurst's commonality principle of commonality. Here you can see the trough which formed last week was clearly lower. It was a good deal lower than the trough in the second week of June, and so the trough, whichever trough it was, most probably formed last week. And if you look down below here, you can see a fairly good nest of lows centered around last week, and that is of course the nest of lows for the 40-week cycle trough. And so the analysis in the DAX tips the odds slightly in favor of last week's trough having been a trough of the 40-week cycle. Now, interestingly, you can see in the DAX we still have a nest of lows positioned at the foot of the chart. We don't have hollow diamonds. However, in the Nasdaq, we had diamonds positioned at the foot of the chart, and in the S&P 500, we also had diamonds positioned at the foot of the chart. I'm often asked, at what point does StInTrade decide that that is probably a trough? Well, there are many factors that StInTrade takes into consideration, but one of them certainly is, of course, the amount of time. Very few days have passed since this trough formed in the Nasdaq. I think almost 2 weeks have elapsed since that trough formed, and in the DAX, because it formed last week, it's only been 1 week. So that's one difference. One reason why the DAX doesn't have a hollow stack of diamonds under the trough is simply the amount of time that has elapsed is not really enough time for StInTrade to say, yes, that is probably the trough that we have been expecting. But another thing that StInTrade measures is called the plunge and the bounce. Now, the plunge is the speed with which the market moves down into the trough, and the bounce is, of course, the speed with which the market moves out of the trough. And as soon as the bounce has moved with sufficient speed to allow StInTrade to think, if one can say that software thinks, I don't think it does really, but as soon as the bounce is fast enough or strong enough to indicate that the trough, the magnitude of which we were expecting, probably did form in the market, then StInTrade will position those hollow diamonds there. But to all intents and purposes, if you see a nest of lows underneath a clear trough, as we are in the DAX, then there's very little difference between seeing the nest of lows and seeing the stack of diamonds. You certainly must not wait until you see the stack of diamonds before making trading decisions. Okay, the fact that you are expecting that trough is good enough to make trading decisions on the basis of that trough forming in the market, because we were expecting the trough to form at that time in the market. Let's quickly take a look at the Footsie. The Footsie has been fairly difficult to trade. It's been a bit sort of spotty. This isn't a very good data series, but it's been moving with not really a lot of volatility, but it's been moving with great determination. First in one direction, then in another direction, and we're getting these really strong moves in the Footsie, making it fairly difficult to trade, in my opinion. So I've stayed clear of the Footsie future for a little while, actually, because it's been really quite volatile. But this looks like a fairly good analysis. And you can see a very clear trough formed last week. I mean, look at the difference between the trough in the second week of June and the trough that formed last week in the Footsie. Is a really big difference, and this is a strong reason why I believe that the trough probably did, whichever trough it is, it was a trough that formed last week as opposed to the week before last. And so there it is, a very clear trough in the Footsie. notice how the Footsie hasn't even reached the 20-day FLD yet. So the Footsie is still offering us with a good entry opportunity. And with the speed with which it has been moving, that's definitely an entry opportunity that I would consider. And so I might take an interest in the Footsie again, where we've got a fairly good setup. This would be the F category interaction here as price came down below the FLD. Here's a typical GH as price reached towards the FLD and then dropped down again. So there's our GH, and so here's our A category interaction coming up next. And so we've got price heading towards the 20-day FLD, looking very good for a long trading opportunity in the Footsie. Let's take a look at the euro to US dollar. There it is over there. Now the euro to US dollar has been trading very well, very predictably. It's been following the cycles really nicely, and it bounced out of an 80-day cycle trough over here in the last week of May, as I've spoken about before. Last week we were looking at price coming down to the 20-day FLD, or over the past 2 weeks coming down to the 20-day FLD in a B category interaction, because of course here's our A category interaction as price broke up above the 20-day FLD. Last week it came down to the 20-day FLD. There it is. I'll just make it a little clearer on the chart. In a B category interaction, of course, at the B category interaction, we expect price to come down to the FLD, find support at the FLD, and then bounce up again in a C category interaction. And in last week's video, I spoke about the way of getting into a C category trade, which is a standard process in the FLD trading strategy, and it's something that you do often need to use, because when price comes down to the 20-day FLD, it doesn't provide us with an entry level, of course, because it doesn't cross the FLD. And look at the accuracy with which the 20-day FLD provided support. Of course, at the point of the B category interaction, we expect price to come down to the FLD. There you can see it almost touched the FLD. Then on Monday of last week, it found support at the level of the FLD. Look at that, very nice and accurate. And then, of course, we expect the C category interaction. Now, I spoke last week about using the 10-day FLD to get into your C category trade. And the 10-day FLD provided us with a very, very good entry here. There is the 10-day FLD. I've had it highlighted. And price crossed the 10-day FLD at this level over here. So let's just speak about this for a moment. That's called the crossing point, the point at which price crossed the 10-day FLD. Of course, we wouldn't have actually entered at that level, because you don't enter within the range of the previous bar's trading. Well, that's one of the guidelines of the FLD trading strategy. If you want to, of course, you could, but I don't enter within the level of the previous bar's trading. So my entry was at this level over here. Okay, so we got into the C category trade. Now, at that point, what is our target? This makes for another very good example of how you calculate your target. What you do is you take this low point over here. It's the low point that follows the previous interaction. That's quite an important subtlety. So in other words, we don't calculate our target all the way back to this low point over here, because of course that was the low point that preceded the A category interaction. So when we're entering into a C category trade, we go back to the B category interaction, which, as I've just mentioned, was price coming down to the FLD, and we take the lowest point following the B category interaction, which was of course the low on that Friday. So that low point was at about 111,500 roughly. And then you measure the distance up to the crossing point, not the point at which you're entering into your trade, because your entry, of course, is often slightly displaced because of the fact that we don't enter within the previous bar's trading. range, the range of trading from the previous bar. So our entry price was up here a little bit higher, but our crossing point, the point at which price crossed the FLD, was over here. I won't bother writing it. It was a level of 112,640, something like that. And so you then extend an equal distance above that, and you get your T2 target, or your target for the move, of 113.77, something like that. As you can see, price came up to that level, to our target, and it reached the target over here. It was somewhere over here. It popped its head a little bit above our target level, and then it came down again. Does that mean the euro isn't going up any higher? Not necessarily. The euro might go up higher, but what it means, and it's an important point, is that our C category trade is, to all intents and purposes, over. All right, the cycle move that we were trading, which was based upon price crossing above this FLD here, that cycle move is complete. It happened just within those few days. And that's what happens with these cycle moves. Okay, once the cycle move is complete, that particular trade that we were making is over. Okay, so it's an important point that once your target has been achieved, then your cycle move is complete. Our next trade in the euro to US dollar is, of course, going to be a short D category trade as price comes down below the 20-day FLD. So that's the next trade I'm looking at making in the euro to US dollar as price comes down to the 40-day cycle trough, which is expected. When's that cycle trough expected? Here we go, about the first week of July. The 40-day cycle trough is expected in the euro. Final thing to look at this week, quickly, we'll take a look at gold. Now, here you can see this is the analysis of gold using synchronized troughs, and here is the A category interaction that I spoke about last week, where price is bouncing out of this 80-day cycle trough and crossed the FLD over the weekend. And as you can see, price has reached up to its target. Again, an equal distance between our initial stop loss and the crossing point. And it achieved its target last week on Thursday. It was just above 1200, I believe. And so our A category trade is over. All right. Do we expect gold to continue moving up? Well, yes, I do, over time. But of course, the next interaction that's going to happen is that price is going to come down to the 20-day FLD. And that's going to be a B category interaction as price comes down to the 20-day FLD, and then of course it's going to go up in a C category interaction. That's what we expect, is that sequence. An interesting subtlety here, you'll notice that the 20-day FLD was actually crossed over the weekend. You can see price 2 weeks ago on the Wednesday came up almost to the FLD, stayed below the FLD on the Thursday and on the Friday. And on the Monday, without really doing anything, it crossed over the FLD. So where was our crossing point? Somebody asked this the other day on our Hurst chat. And so what you do is you plot the median price. If you don't have StInTrade, you can use any trading platform or any charting platform to plot the median price. And you need to, of course, fill in the median price between Friday and Monday. You simply draw a straight line between Friday's median price and Monday's median price, and that is your median price line. And then the point at which the FLD crosses the median price over there, that is the level of the price crossing of the FLD, which in the case of gold was about 1181, I believe. Thank you very much for joining me in the Hurst trading room today. I wish you profitable trading and look forward to seeing you next time.